Alright, let's get into it. You hear public sector accounting and I know, your brain just wants to shut down. It sounds like the most boring thing on planet Earth. It's like watching paint dry, but the paint is beige and the wall is also beige. But stick with me, because this is actually a huge deal, especially for a country like Pakistan. We're going to talk about something called Ipsas 17. Think of it like a super detailed instruction manual for governments on how to keep track of all their physical stuff. It stands for International Public Sector Accounting Standard 17, and it's all about property, plant, and equipment. Basically, it's the Marie Kondo method for governments. Does this public hospital spark joy? No? Okay, we can't throw it out, but we can figure out exactly what it's worth and if we're taking care of it. So, what's the point? Why create this ridiculously long name for a rulebook? Before Ipsas, it was like the Wild West of government accounting. Every department, every ministry imagined trying to figure out what Pakistan as a whole actually owns. It was a mess. One office might list a 50-year-old building at the price it was built in the 1970s, which is like the cost of a new iPhone today. Another office might not even have it on the books. Ipsas 17 forces everyone to play by the same rules. It standardizes how you recognize an asset, how you measure its value over time, and how you report it. Okay, let's demystify this term. Property, plant, and equipment, or PP&E. It sounds like something a boring uncle would talk about at a dinner party. But it's actually just a fancy accounting term for all the big, physical, long-lasting stuff a government owns. We're talking about tangible items. Things you can touch, see, and probably get a parking ticket on. Ipsas 17 defines them as assets that are held for use in producing goods or services, for rental to others, for administrative purposes, and, this is key, they are expected to be used for more than 1 year. So the paper clips in the office? Not PP&E. The massive government building itself? Definitely PP&E property usually refers to land and buildings. Supreme Court building in Islamabad, land under a public park in Lahore, government-owned office complex in Karachi. These are huge high-value assets. Before Ipsas 17, valuing these was a free-for-all. Now there are strict rules. You have to record them at their cost. Or if that's not possible, at a fair, professionally appraised value. This puts a real number on some of the nation's most valuable real estate. It's no longer just a building, it's an asset worth billions of rupees. Next up, plant. So why the big push for this in Pakistan? Why now? For decades, Pakistan's public financial management was, let's call it old school. It was based on a system that was really good at one thing, tracking cash. Money comes in from taxes. Money goes out for salaries. Money goes out for projects. Simple. But this cash-based system has a massive blind spot. It tells you nothing about the country's long-term assets or liabilities. It's like judging your personal wealth just by looking at the cash in your wallet, while ignoring your house, your car, or the massive student loan you haven't paid off. It gives you a dangerously incomplete picture of your financial health. This old system created a culture of neglect. When you don't track the value and condition of your assets, you don't plan for their upkeep. Think about it. Pakistan has thousands of kilometers of roads, countless government buildings, schools, hospitals. Under the cash-based system, these assets were essentially invisible on the financial statements after they were built. A road was a one-time expense. Alright, so you're a mid-level government official in, say, the Punjab Public Works Department. Your boss walks in and says, "We're implementing Ipsas 17. Make it happen." You panic. You start sweating. "Don't worry, I got you. Here's the step-by-step playbook." Step 1 is recognition. This is the does this even count phase. Identify every single piece of property, plant, and equipment your department owns. You walk around with a clipboard, or let's be modern, an iPad, and you make a list. That fleet of 20-year-old pickup trucks, list them. The headquarters building, list it. The land it's on, list it. The giant rusty bulldozer out back, definitely list it. An item gets recognized as an asset if it's likely to bring future economic benefits or service potential, and if its cost or value can be measured reliably. Once you have your big, scary list, you move to step 2, measurement. This is where you put a price tag on everything. For new stuff, it's easy. The cost is whatever you paid on the invoice. But what about that 50-year-old government rest house in Murray? You can't use the price from 1975. Ipsas 17 gives you options. Cost model. Take original cost and subtract accumulated depreciation, or revaluation model. Hire a professional appraiser to determine current fair market value. For a lot of Pakistan's older assets, revaluation is the only way to go. Step 3 is depreciation. Nothing lasts forever, except maybe the line at the Nadra office. Assets wear out. They become obsolete. They lose value. This loss of value is called depreciation, and you have to account for it every single year. First, estimate the useful life of the asset. A car might have a useful life of 10 years. A solid concrete building might have 50. Then figure out its residual value, what it might be worth at the end of its life, like for scrap. The cost of the asset minus its residual value is the amount you need to depreciate. You then spread this depreciation cost over the asset's useful life. This is a huge change. It forces departments to acknowledge and budget for the slow decay of their assets every single year. Finally, step 4, reporting and disclosure. All this hard work means nothing if you keep it to yourself. The initial cost, the valuation method, the depreciation for the year, the final carrying amount. You need to provide detailed notes explaining how you got your numbers. This is the accountability part. It allows auditors to look at the reports and ask smart questions. It allows parliamentarians to look at the reports and ask smart questions. It allows the public to look at the reports and ask smart questions. Why did the value go up? Why haven't we budgeted to replace these fully depreciated vehicles? So this isn't just theory, right? This stuff is actually happening. Let's look at some real-world examples from Pakistan. One of the biggest players to take this on has been Pakistan Railways. I mean, think about it. Their asset list is insane. They own thousands of kilometers of track, hundreds of locomotives, thousands of passenger coaches, freight wagons, massive train stations, workshops. Implementing Ipsas 17 was like turning a giant floodlight on a dark, cluttered warehouse. Teams had to physically verify the existence and condition of tracks. They brought in professional valuers to assess the market value of their massive land holdings. Suddenly, on paper, the value of Pakistan Railways skyrocketed. It wasn't that they got new stuff. It was that for the first time, they had a realistic financial picture of what they already owned. This allows them to better manage their assets. Another great example is in the energy sector. They own massive power plants, turbines, generators, cooling towers, incredibly expensive with finite lifespans. Now, they must apply depreciation. Every year the value goes down to reflect wear and tear. Provincial health departments must catalog every hospital, clinic, ambulance, and major equipment. When a new MRI is bought, it's recorded and depreciated over its useful life. Budgeting follows accordingly. Now this all sounds great on paper. Clean books, total transparency, everybody's happy. But in reality, implementing Ipsas 17 in Pakistan's public sector has been an absolute marathon. There are some massive hurdles on the track. The first and biggest is the sheer lack of capacity. You can't just hand them a new rule book and expect overnight experts. It's a fundamental change, from cash to accrual. Most government accountants were trained in the old system, masters of cash-based bookkeeping. Concepts like depreciation, fair value assessment, or impairment are new territory. Then there's the data problem, or rather, the no data problem. What was the original cost of this building from 1982? Where are the ownership documents? When was this road last resurfaced? For decades, record-keeping has been inconsistent, paper-based, and often missing. This lack of historical data makes initial measurement a nightmare. It forces departments to rely on expensive, time-consuming physical verifications and professional valuations. Don't forget resistance to change. The old system was familiar. The new one is complex and demands more work, and it brings transparency that can be uncomfortable. Proper tracking makes it harder for things to go missing. That threatens vested interests, so you get pushback. Finally, the sheer scale and cost. Pakistan is huge with an enormous public sector. Identifying, verifying, valuing every government asset, from the Prime Minister's office to the smallest rural clinic, is gargantuan. It requires dedicated teams, specialized software, training, and significant budget for valuers. In tight-budget Pakistan, spending millions just to count and value existing assets is a tough sell. It's spending today for benefits years later, and it needs real political will and foresight. Okay, so the challenges are huge. It feels like trying to climb K2 in flip-flops. But it's not impossible. There are clear, practical steps Pakistan can take to get this done right. The 4 steps: training, technology, phased rollout, political will. The absolute #1 priority: massive, sustained investment in training and capacity building. This can't be a one-day workshop with stale samosas. We need a long-term nationwide program. Update curricula and create certification programs. Second, embrace technology. Managing a national asset register on Excel is a recipe for disaster. Invest in robust, centralized ERP systems. Think of it as a super smart system that connects all government departments. When a highway is built, it's entered and visible to finance and auditors. Automate depreciation calculations and maintenance schedules. Flag assets that need attention. Turn paper into digital process. Third, tackle this in phases. You can't boil the ocean. Start with large federal entities and major SOEs. Let them be pioneers. Learn from mistakes. Develop best practices and templates. Then cascade to provinces and districts. Finally, none of this works without sustained political will. Top leadership, Prime Minister, Finance Minister, Chief Ministers, must champion it and allocate budgets. Communicate why it matters to the bureaucracy and the public. Set clear deadlines and oversight. Hold ministries accountable. Frame reform as core to good governance and anti-corruption. When leadership declares it non-negotiable, the system will start to move. So what does the future look like if Pakistan actually pulls this off? What's the end game? The long-term vision is a public sector that is run with the same financial discipline as a well-managed corporation, but with a public service mission. The full adoption of Ipsas 17 and other accrual-based standards will lead to a whole-of-government balance sheet. For the first time, we could see a consolidated financial statement for the entire country, listing assets and liabilities, Gwadar Port, Kunjarab Pass Road, and all of its liabilities like public debt and pension obligations. This would provide an unprecedented, holistic view of the nation's financial position, a powerful tool for strategic decision-making. Imagine a national asset management plan. Renovate, sell, or build strategically. The government could decide which buildings to renovate, which to sell, and where to build new ones. They could analyze SOEs not just on profitability, but on how well they manage public assets. That helps allocate scarce resources where they'll deliver most value. This data-driven approach enables smarter budgeting. Better decisions mean better services for citizens. Transparency empowers civil society, journalists, and ordinary citizens to hold government accountable. People can start asking informed questions about assets in their district. Transparency leads to scrutiny, scrutiny to better performance, and better performance builds public trust. The road ahead is long, but the destination is worth the journey. Look, I get it. After all this, you might still be thinking, Hassan, this is still just accounting. Why should I, a regular person, actually care about Ipsas 17? And here's the bottom line. You should care because this is about your money. Every road you drive on, every public park your kids play in, every government hospital you visit, you paid for that. Your taxes, directly or indirectly, built and maintain this country's infrastructure. Ipsas 17 is the tool that forces the government to put a number on all that stuff and prove to you that they are taking care of it. It's the receipt for the nation. You should care because this is about the quality of the services you receive. When a government doesn't properly account for wear and tear, it leads to decay. It's why schools have leaky roofs. Tracking condition lets you fix things before collapse, and why public transport buses break down. By forcing departments to account for depreciation, Ipsas 17 makes them plan for the future. It pushes them to budget for repairs and replacements before things fall apart. This means better, more reliable public services for you and your family. You should also care because this is a powerful weapon against corruption and mismanagement. An opaque system is a corrupt official's best friend. When assets are tracked publicly, misuse and illegal sales become harder. A transparent public register creates a paper trail auditors and citizens can follow.